Hello, and thank you for joining us today. I'm really glad you could be here. So let's talk a little bit about how to become your own bank, how to actually create financial freedom. It's very important and actually can be done easier than you think it can be if you know the formula and the steps to do so. That's exactly what we're going to be decoding today. And with us to help is Nick Kosko. Now, he's actually a former pilot who knew there had to be a better way to be financially free and provide for him and his family. Now, after interviewing several traditional financial advisors and rejecting that path, he actually came across infinite banking and it changed his life for the better. So by understanding how banks work and how he could be his own banker, Nick was able to get his passive income to exceed his ideal standard of living. And now as a wealth strategist at CreateTailwind, he educates, motivates, and inspires people to take back control of their money. Nick, thanks for joining us today.
Hey, man. Thanks for having me, Ty. It's a pleasure to serve your audience today.
Well, I'm glad you could be here, man. I mean, you've accomplished what so many want to do, which is that their passive income is built to a point where it can support your life, support your lifestyle. A lot of people would love to get there. And we refer to this as becoming your own banker. So let's start there. Why do we refer to this as becoming your own banker? Like how's that work?
Yeah. So it really comes down to understanding how do banks work? It's almost like a mystery, right? Ty, what caught my eye is that the banks are always the nicest building in town.
Right? That's so true.
Yeah. And it's funny is like, I was reading the book, Becoming Your Own Banker. And honestly, it's this 92-page book that almost gets lost in you can get lost in its simplicity. But Nelson Nash, the author, he just said, all money flows through a bank. There's literally one pool of money in the world. Why in the world would I let somebody else be my banker if, big, huge word, if I understood how the bank works? And so, Ty, simplicity is elusive. Agreed? Disagreed?
Very agreed. Yes.
It's almost silly how complicated we make it. So how complicated does the financial world make everything? Well, they make it so complicated. I mean, just look as an example. You ever read the prospectus that you get in the mail? You ever read one front to back?
I do. I read it all because I like to read any kind of message like that I get.
Yeah, you love the two size font print on the onion paper that's got like 57 pages, right? Like it's good reading material with the suds at the bar, right? So no, they make it so stinking complicated. We just go, you know what? You do it, right? They're playing a game so well that we don't even realize there's a game going on. So, but we got to understand, Shakespeare said, if we understand the players in the play, then we'll understand what's going on. And if we just peel back the onion just a little bit on what the bank's doing, it becomes dumbly simple, the process. And so let's just kind of walk through it, Ty. If you want to, we can just walk through how the bank works. You good with that?
Yeah.
So you're the depositor at the bank. You go down and you deposit $10,000 into the bank. Now, we have clients that are putting $10,000 a year into their systems, and we have clients that are putting millions of dollars into their system. There's even an oil and gas baron in Nebraska that puts $800,000 a month through his system. Okay. So this works for everyone. All right. So you make a deposit into the bank. Is that an asset or a liability to the bank?
Asset.
Hey, don't feel bad. It's the wrong answer, but that's how everybody answers it.
I had a 50-50 chance too.
Unless the only people that ever answer it, Ty, are the CPAs. Okay. Because they're so used to this, but it's a liability to the bank because they got to pay it back to us. All right. So how do they make it an asset? It's the loan that's the asset. Okay. So Ty, if we were going to evaluate buying a bank, we would analyze their loan portfolio. Okay. And if you ever see a bank for sale, if you wouldn't mind giving me a call, we'll put together a couple of guys and we'll buy the bank. It's almost a no-brainer, but you'll never see one for sale. All right. That's the problem. It's a good old boys network because they understand how powerful this is. So they lend the money out, they collect a little bit of interest from the consumer, and they pay the depositor even a little fraction of that. Okay. So that's the process, right? We have the depositor, the owner, and the borrower. There's only 3 players in the play. Okay. Now, hey, it sounds pretty innocuous. Hey, most people understand that that's what's happening, but there's a little problem. They don't dig one level deeper. And this is what I was doing, Ty, when I was flying airplanes around the world, going to all kinds of cool exotic places, flying a 747 around the world, having the time of my life. It was my dream job. I knew that there was a better way. And I started asking why. Like my youngest kid's 5. He asked me why incessantly. Well, I'm 44 going on 5, I guess, because I ask why all the time. And I said, why is that building the nicest one in town? And so here's the problem. When you deposit that $10,000, now I'm going to use some numbers that are going to sound a little dated, but there's a reason why I'm using them. They're going to pay you 0.2%. They're going to pay you a whopping $20. All right. They go and sell that money for anywhere from 4 to 28%, right? So let's say on average, they collect 5.2%. That's $520. Okay. Now, not to put you on the spot, but $520 the bank collected and they paid you $20. How much better did the bank do than you?
Considerably. 22x, 25x.
There you go. 20. So I love it. You're thinking like a business owner, because a lot of times people say $500. Well, that's a consumer mentality. It's 2,600%.
Jeez.
Okay, Ty, it gets worse. They made 2,600% with your money. Leverage, the power of leverage. All right. The bank has no skin in the game. All right. Okay. Do they have defaults on their loans? Less than a couple percent. They're really good at that underwriting, aren't they? How many pages are in that application? They only lend to you if they know you can pay back, right? So here's the problem. The owner made all the money in that deal, right? They made 2,600%. I don't care what business we're in. If you and I are evaluating a business opportunity and I've got a 2,600% projected return, even before expenses, I'm probably in, right? I'm at least digging in further. Now, the vast majority of Americans, they have handed over this right in their lives, their financial lives. They're not willing to do it. Infinite banking can work for everyone. Here's the booger. Most people won't do it because they're in the herd, right? They think, if I go down, at least everyone's going down with me. You and I aren't common thinkers. We've already broken out of the herd, right? And I've always been like, God didn't bless me with height, good hairdo, anything like that. But what he did do is he blessed me with the ability to recognize that when everyone's going right, I'm curious about what's going left. What's going on over there? And so that's where this comes into play. It's like, once you know what's going on, you'll know what to do. And so that's just real simply, that's how the bank works. That's how infinite banking works. It's just it's putting a wall around all 3 of those entities. People are going to make it more complicated. They're going to get all wrapped around the axle about, how many decimal points we're going out and things, but it's totally missing the point. So there you go. That's it.
So if I want to become my own banker in infinite banking, so how does that work? What am I doing? Am I taking my own money and lending it out to people to get a rate of return? Or how do I start getting into infinite banking?
Yeah. So infinite banking, it's really important to remember this. It's a process. It's not about a product. Okay. So any of your listeners that want to have a 20-minute call with me, I'll send them a book called Becoming Your Own Banker. And we'll give you that information here in a little bit, but they can read about it. And really the process is what I just said, but you can do the process of banking with your shoebox money, your savings account, your checking account. You can do it with a CD. Nelson Nash just discovered, he'll say he didn't invent this. He discovered it. It was already a thing, right? But he said the most advantageous platform to do this on is a very specifically designed dividend paying whole life policy with a mutual company. And the reason is because your money never leaves the system. So there's a debate out there, Ty, whether or not Einstein said this or not, but compound interest is the eighth wonder of the world, right? Those of us that are talking about money all the time are always seeking uninterrupted compound interest. Like we think about like a real estate deal or a business deal that's spitting off all kinds of revenue for us. We don't want to shut that off, right? We don't easily sell these great cash flow assets. Somebody has to come along with one heck of a boatload of money, right? Well, what Nelson discovered was that we are always thinking about money incorrectly, Ty. And so up to this point in your life, most people have thought about money as either in their pocket, in their checking account, or big, huge word, right? In marketing and life, or it's in this cash flow asset. Okay. Now, with these life insurance contracts, you get to do something, and it's my money is in the policy. It never leaves, and I get to use it. Now, that messes people up all the time. They're like, how is that possible? Well, that's where the partnership with the insurance company comes into play. We're borrowing money from them at pre-negotiated terms and pre-negotiated rates. I get to use the insurance company's money with mine as collateral, and I get to go take down the business deal and the real estate deal. The power of leverage. Now, what did the bank do? What did the bank do with my deposit? They lent it out. They leveraged my money. Back to the process of being your own banker is that. So the first step is frankly understanding that there's this problem going on. Okay. We are really solving only one problem. When we can cover that here shortly. But then the process is, hey, I'm going to capitalize my system like we do any business, right? If you and I wanted to go buy a bank charter, hey, remember I mentioned, hey, if you ever see a bank for sale, is that easy or cheap to do?
No. I watched the show Billions, and he just did it, and it wasn't either.
I love it. Axe, I won't give it away for everybody, but Axe finally pulled it off, didn't he?
He did. He did pull it off.
Yeah. And I'm not too far past where he pulled it off, so I don't know how this ends, but
me either. I was going to tell you, don't spoil what comes
after. Yeah. It's not simple, right? It's easy, not simple, or simple, not easy. All right. They don't let this happen. So here's the thing. Your audience is intelligent. They're business owners. Okay. So they're already thinking like this. It's when I'm talking to somebody that's like in the herd and they don't even know how to think about business, right? That's when those are the people that aren't going to do this. Okay. So we have to think like a business owner. I've never bought a business or a piece of real estate that I didn't have to put some capital into. Right. So if we're going to start our own banking system, I got to capitalize my banking system. So some of the conversations we have, Ty, is about, hey, where do you have money on the shelf? Where do you have money locked up in prison? Different places. And we can start systematically redirecting that in to fund their banking system. And then where we really love, there's a lot of people on the internet talking about paying off debt and whatnot with banking system. And we do that. But our real interest, our real passion is showing people how to buy businesses and real estate and cash flow assets. So starts with capitalizing. Don't be afraid to capitalize. I mean, I always think about this, Ty. What's the biggest check that you could write? And would the bank turn you away? Would they say, no, we can't take that big of a check? No. What's that battle Axe was having? We got to get depositors. He was going after the marijuana business, right? So he was like, he knew he had to get depositors because what's the bank know? They know they got fractional reserve lending on their side, so they can lend out 10 times that. So we can't be afraid to capitalize our system. It's sometimes people ask the wrong question, Ty. They go, hey, what's the least amount I could put into this? Well, why would you do that? That's not the point. I want a system that'll hold all of my money, because here's the cool thing, Ty. At the end of the day, all my money's in a tax shelter. So would you like to learn how to become tax invisible?
Yeah.
All right. Do you agree that taxes are going up in the future?
Yeah.
Yeah. So all of us business owners are tackling this problem right now. And that is, it doesn't matter, frankly, who got into office. Okay. It's just a math problem. When people understand the relationship between the IRS, the Federal Reserve, and the Treasury, they realize, hey, every time we print money, it's just a debt for the future. And the only way that the Treasury can pay the debt on the printing is to collect more taxes to the IRS. It's a sick cycle, right? It's just, who are they going to tax, right? So they're going to have to raise taxes. All right. David Walker was the comptroller for the United States, which is like the CPA for the United States back in Clinton and Bush. He was the comptroller for like 10 years. Before last year, before we turned on the money press, he surmised that taxes would double by 2030. That's pretty staggering. Frankly, taxes are still on sale if we look historically at taxes. But if we can become tax invisible while we're our own banker, there's a great book that we teach out of called Tax Invisible. And it's just, hey, what if I just put my money into these life insurance contracts? Ty, get this. So we've got the policymakers in this country, the congressman, knucklehead in the White House, all not to be political, they're all knuckleheads, all making these rules. So it used to be before like 1984, 1988, people were putting tens of millions of dollars into these insurance contracts. And then Congress passed two different acts over those 2 years, 84 and 88, and they created something called the Modified Endowment Contract. Are you familiar with that?
Yes.
Okay. So the Modified Endowment Contract, for you listeners at home, just says we can't put in $1 into a policy and get $1 to use right away as a standalone policy. It used to be that if you put in $10 million, you'd have $10 million to use right away. Congress said, that's not life insurance. That's a tax shelter. So they changed the rule. Okay. And let's just say if you were visualizing a line, a horizontal line, with on the left side is the most efficient. That's that dollar for dollar. And the right side being the least efficient, we'll call that term insurance. Well, that MEC line is about a quarter in from the left. Okay. Now, almost no one knows this happened, but in January of 2021, in the last COVID relief bill, at the 11th hour, slipped in there was a change to the life insurance rules. Okay. It's the federal code 7702. And what they did is the policymakers, the people that make the rules for this, actually moved that MEC line, and they moved it to the left. They made it more efficient for us as consumers. They made it so that we can get more money into these efficiently. Ty, why on earth would they do that if they didn't know there was an issue coming? They know there's a tax train coming. Right now on the table is to make every transaction in a bank over $600 reportable and to get rid of the Roth IRA. It's on the table. Why are these people doing that? The policymakers are jockeying. I don't think they'll get rid of the Roth yet, but it's pretty telling that there's some little things going on. They're trying to monitor this, but that's not what the common people are doing, or that's not what the uncommon people are doing. People making uncommon amounts of money are doing uncommon things with their money. So they're moving money into tax shelters. So there's a couple problems being solved when we're our own banker. Not only do I get easy, quick access to capital that's in my policy, I'm also making myself tax invisible. That's why we're talking to a lot of business owners these days, trying to solve this problem. So, all right, that was a really long-winded answer. I'm sorry.
No, I love that. And when it comes to insurance, what are some of the best, what policies do you consider putting your money into? You've already said term is not what we go with. Whole life sounds like the better path, but how do we figure out the best whole life policy to be able to park our money?
Yeah. Thank you. That's a great question. You really got to find trusted people to partner with. We always say like, hey, it takes some courage, confidence, conviction, and coaching. So you got to reach out to reputable people that have been doing this for a long time. The founder of our firm's only been doing this for 34 years. I would say he's arguably the most sought after person in our space. And, being mentored by him the last 7-8 years has taught me how to look at that landscape of insurance. And so there's a lot of insurance companies that will quote unquote make you a infinite banking friendly policy, but they really need to meet a couple criteria. So one, you need to find a mutual company. Okay. So Ty, do you know the difference between a stock company and a mutual company?
Yeah, but please explain.
Yeah, no problem. So to your audience, a stock company is an insurance company that is owned by Wall Street investors, simply said, like AIG, something like that. And when all businesses, when they're profitable, they pay out a dividend. So in a stock company, when the business is profitable, they pay the dividend to the shareholders. In a mutual company, the only people that own the company are the policy owners. So when the company's profitable, they pay the policy owners the dividend. So it's pretty cool. It's like the insurance companies are just financial institutions. They're the biggest financiers in the world, frankly. And so when they're profitable, I'm just borrowing money from another financial institution. It's actually a great deal for both parties. So first we got to find a mutual insurance company. Then we got to find one that actually supports doing what we're doing. There are well-known mutual insurance companies, which I'm not going to name any names, that they don't want you to do this. Their interest rate may be high. They may penalize the agent and the renewal commission if their clients are taking loans. They may put pressure on the agencies through other forms to not do it. There is a large mutual insurance company that has gone through seasons where if you handed out the book as an agent, becoming your own banker, they would terminate your contract. Okay. That company does a lot of marketing, and there are people teaching IBC with that. And honestly, I just don't think they know what they don't know in some cases. Okay. So we got to find the companies that are very friendly to that. Then we got to find one that's been around for at least 100 years. I want to find one that's been paying a dividend for at least 100 years through the depression, the wars, all of that with no problem. And then we got to find one that will service us. So like the company that we most readily write with right now, if I wanted a loan, let's see, it's what time? It's like 10:30 here on the Eastern time zone. If I wanted a loan, like if I needed $100,000 to take down a deal tomorrow or $1 million to take down a deal tomorrow, I could have that tomorrow wired to me. That's a partner. There are other mutual insurance companies that check a lot of those boxes that it might take 20 days to get you a loan, or someone's going to have to move heaven and earth to get it to you in a week. So you really need a partner. There's a couple companies out there that have recognized that this is a need in the marketplace, and they've actually allowed infinite banking firms like CreateTailwind is. This is really all we do. They've allowed us a seat at the table to help construct the policies. And so it's talking to firms like ours that can actually talk through with you the various pros and cons of companies. We can write with any of them. I'll tell you who's getting my money in those conversations, and you make the decision. I don't care which one you write with, you purchase from. I can help you with any of them, but I know which ones are going to serve you best in the long run. So yeah, that's the answer.
What about challenges? What are some of the challenges you see people face trying to, break in and get into infinite banking?
They let the noise in. The world is is overloaded with knowledge, and it's starving for wisdom. Look, everybody that has got some money can pay to be on YouTube and have a voice. Because you got money, now you got a voice, which doesn't mean you know anything. So, if you were to stumble upon one of our YouTube, like our podcast is called Breakaway Wealth. And if you were to watch some of our video podcasts, Ty, the next video that pops up automatically is a guy out there telling you a lot of incorrect things about infinite banking. All right. I can't control him. Okay. But what do people do? They latch on to these messages, right? They latch on to the fact that, 0% financing for an automobile is a thing. There's no such thing as 0% interest. They just charge you all the interest up front. Okay. They charge you more for the car up front to get their 0% financing. But we're bombarded with that stuff in the media. Ty, so you're going to see between 5 and 10,000 ads today. Do you know what they all have in common?
What's that?
They're geared to get money to flow away from you. Okay. So the barrier that I see people have is that they let the noise penetrate them. But are you familiar with the logo that's in the FedEx logo?
Yeah.
Inside of it? Okay. Once you saw it, you can't unsee it, right?
You can't.
Yeah. So like when I see Jennifer Garner and Samuel L. Jackson on primetime, time after time after time, yeah, Capital One's not making any money, right? So that's noise, right? It's telling you, it's telling you that you need that credit card. It's telling you that you need to live above your means, right? It's Parkinson's law. Our spending will increase to meet our income, right? So it's really the noise. It also comes down to people having arrival syndrome. They think they already know everything. And for you and I to be successful in any of our business endeavors, what do we have to be willing to do? We have to be willing to be wrong, right? To rethink our thinking. And so those are the barriers that I see. People can always find capital, okay, to fund their system. It's how willing are they to do it? How much imagination do they have? Einstein said imagination is more important than knowledge. And so, if we can use our imagination, get creative, you can overcome those things. And frankly, it really comes back to, if you understand what's going on, you'll know what to do.
Nick, powerful stuff. We only kind of scratched the surface of this and what there is to learn about infinite banking. Where can everybody go listening and watching today to be able to learn more?
Yeah, thanks. Just go to CreateTailwind.com. If you click on the contact button, we have a no hassle guarantee. If you click contact us, you'll get a link that says from me. You can schedule a 20-minute call. I can answer your questions. I won't even let you buy at the end of that 20 minutes because honestly, it's highly unlikely that you know enough. I can direct you to some, if you go to our YouTube channel, it's CreateTailwind, all one word. You can listen to our podcast, Breakaway Wealth. There's a treasure trove of information on there. You can go to infinitebanking.org and you can buy the book, Becoming Your Own Banker. Or if you do that 20-minute call with me, I'll send you a free copy as a thank you to your audience.
I love it. Thanks for tuning in, or thanks for coming in. I really appreciate you sharing today.
Yeah. Thanks, Ty. Thanks for having me. And hopefully your audience gets a ton of benefit out of that.
I know I have, and I think they will as well. So listen, if you're listening and watching this, a lot of good stuff. And what infinite banking really is about is it's about, instead of giving somebody else, a bank, your money and letting them invest it as they do. And what's interesting about what Nick says is that, and maybe I geek out more than the rest, but if you ever look at a bank's balance sheet, if you ever really look at what's going on at a bank's balance sheet, like Bank of America, you can clearly see the money they're putting into these insurance policies.
That's right.
So what Nick is basically saying is, hey, look, why give them the money and let them get all the return? Infinite banking is all about you getting the return. And in doing so, creating recurring income that basically pays for your life. I mean, I don't know about you, but I've got friends in my life where that's what they do. One of my closest friends, 38 years old, literally lives off the recurring income. And it's well more than her cost of living. So that's what we'd all like to do, right? Is where we can kick back, make our own decisions, do whatever we want to do. And the money coming in comes in automatically through recurring income. One of the best ways to do it is to stop giving other people your money and letting them get the return, and you get it yourself. That's what Infinite Bank is about. But it's more complicated than we can unpack here on a 30-minute interview. So if you want to learn more, you got to go to CreateTailwind.com. If you go to CreateTailwind.com, then you can take the first step, even schedule a consultation with Nick to learn more about how you can stop giving other people your money and letting them earn the rate of return, and how you can become your own banker and do exactly the same thing. So if you want to earn recurring income and you want to earn it to make it more than what you actually your cost of living is, and enough to be able to live on, to be able to be your own banker, to be able to make your own return instead of giving it to somebody else to do so, the first step to take is to go to CreateTailwind.com. Go to CreateTailwind.com. A lot of great information. Schedule a consultation and take the first step of becoming your own banker. So thanks for tuning in today. Make sure you visit CreateTailwind.com. Have a great day.